Okay, welcome everyone to this public lecture sponsored by the Human Economy program of the University of Pretoria. It's a great honor to have with us here today for that lecture Professor Supriya Singh from the Royal Melbourne Institute of Technology. The title is here. I just wanted to tell you something about the context for this lecture. We are hoping to launch a research project called Money in the Making of World Society, and there is a conference in the next 2 days which will bring together people from many parts of the world and from this region, and we hope that this conference will launch our research project, which is still, as is usually the case, in seeking funding, but with great support from this university, I have to say. I want to introduce Professor Singh, but first of all I wanted to thank the people who've made this whole event possible. Especially Esther Marqueta, our administrator and PhD student, and Karina Garners from the Dean's Office in the Faculty of Humanities. Supriya Singh, I'll start by embarrassing her. Supriya Singh has achieved 3 very distinguished awards in her life. Best student at the Delhi School of Economics, the highest journalism award in Malaysia, and best PhD in sociology in Australia. That gives, I think, some indication of her achievement and of her excellence, but as she pointed out to me, there was a large gap in the middle when she was a mother and a wife, and took up a large part of her academic career when some of us have already given up. She lived in Borneo in the sticks, I mean truly the boonies, for about 7 years, and even so managed to achieve notoriety by sending in a column of what it means to bring up 2 kids under these conditions, and commenting on life in the village to Malaysia's leading newspaper, which was one of the reasons why she won this award. She is interdisciplinary, but her basic instinct, I think, is that of a social anthropologist. She was trained at the Delhi School by M.N. Srinivas, the doyen of Indian sociology and social anthropology, by Andre Bataille, and a number of others. And her basic instinct is incredibly apt for what we aspire to in this program, which is that it has to be launched from the experiences of people on the ground. And in the course of working as a journalist in Malaysia, she found herself commissioned to write a book on the central bank by the central bank governor, which was made quite a splash, and instantly turned her into a financial journalist. So that when she came to Australia, she was pigeonholed as a financial journalist, and but in pursuing her renewed academic higher learning, as it were, she had the good fortune to work in an institute that was dedicated to information technology, and one of her mentors there pointed out that if she's going to be working on money, then information technology is going to have quite a lot to do with it, which is what it turned out. But in the course doing her PhD, which initially was a critique of neoliberalism at its birth, as it were, a study of deregulation and its consequences, she decided that she had to interview the people who were on the receiving end of the financial system, and studied married couples with children and mortgages, and in the course of this discovered that the big financial event in Australian society in the 1980s was probably not deregulation, but the fact that married couples for the first time were opening joint bank accounts. And so she produced a thesis and a book called Married Money. And she has recently produced a remarkable synthesis called Globalization and Money, a Global South Perspective, which came out last year and establishes her, in my mind, as the Viviana Zelizer of the South. I could go on and on. It's just an enormous privilege to have Supriya here with us. I'm going to stop now and hand over to you, Supriya.
Thank you, Keith. If Keith says it's a privilege to have me here, I must tell you how excited I am to be here, not just in this august audience, but actually to be in Africa. I did social anthropology, and you know, the peoples of Africa are part of my intellectual heritage. I studied the Ashanti and the Zulu, the Lozi, I studied the Nuer, so you kind of see how far back I go. And when I was a journalist, I kept telling my editor, send me to Africa, send me to Africa. And this was the 1970s and the 1980s. And all Malaysia was interested in then was palm oil. He says, who's going to read you? So I never got to Africa until 2 years ago when I came to Africa. And the Lozi and the Zulu didn't bring me there. It was M-Pesa. I came on a pilgrimage wanting to know how this wonderful thing works.
Is it on, by the way?
Yes.
So thank you very much, Keith, for inviting me. And yes, Keith sort of did me proud in the introduction. He failed to tell you what really took me back to sociology and anthropology. He was being kind. One day I told my son I would have been a really great sociologist if only I had moved country, if only I hadn't gone there. And I realized I was petrified. I'd lost it. So of course I had to enroll. And this whole business of going from banking back to money, it wasn't my wisdom. It was the participants who on the second interview, in total Australian style, kind of told me I was an absolute idiot if I thought deregulation and competition had anything to do with their lives. This is what happened. And so I found myself, instead of doing a fast PhD on banking, I'd already written 2 books on banking in Malaysia and in Australia. All of that literature went into a footnote, and I knew nothing about Australian marriage. And I had to then write a whole history and generational history, as it were, of Australian marriage. And that was a great learning experience. And that took me back to cross-cultural study, but a cross-cultural study of money and relationships. When Keith asked me to do this presentation, I started thinking, why is it that I am so keen on the global South, and how has it shaped the future of money, or how will it shape the future of money? A couple of things have happened. When governors, central bank governors, meet in the global South, it's financial inclusion that's at the center of their conversations. They want to learn from each other. They want to learn about M-Pesa, whether it will work in their societies. They want to learn about Bolsa Familia from Brazil, about banking correspondence from that country. They want to learn about new ways of banking, about microfinance, about the Kshatriya Grameen financial services that are introducing a new kind of branch banking in India. And they are looking to see whether the unique identification service, the Aadhaar service, will bring 1.5 billion new people in India into the banking system. The other thing that made me think that it's the global south that's going to be more important is that basically we in the global south are becoming more important, more confident in seeing ourselves as the mainstream. This comes as a bit of a shock to people in Australia because they seem to think that the mainstream is exactly how the Anglo-American pattern of family and money works. But when you look at it, actually the Anglo-American pattern is a powerful, distinctive, but a minority in the way people use money in their families and the way they use money in banking. So what's going to happen is that mobile money, and particularly the mobile phone, but different versions of technologies are going to be central. But this is going to be grounded in the realities of the way we bank, the way we pay, the way we save. It's a very different future from the kind you see when you click on the internet on conferences of the future of money. I don't recognize myself in that. First, they're all male computer scientists under the age of 30, and they're all talking technology. Nobody is talking relationship and personal lives. So in this vision of the future of money, I see the market and the personal dimensions of money being intertwined. And I see it as remaining the same and changing greatly. It will remain the same in that it's intensely personal and impersonal. Trust remains at the center of it. But it will become different because money, in becoming global, has also become more mobile and virtual. But the whole calculation of money across borders changes. It changes the way money is valued and the meanings of money. So global money actually has very different characteristics from money that operates within national and regional borders. Let me just tell you a little bit of where I'm coming from. Because going from the micro to the macro reduces a lot of complexities and diversities. First, it's multidisciplinary. It happened it was a great accident and one that I have celebrated, but it happened very much as a matter of gendered disciplinary career and having to move from one to the other and then having the good fortune to be able to synthesize it. My own research and experience comes from Asia, from India and Malaysia particularly, from living in Australia, from studying the Anglo-Celtic, and I know Keith sort of balked at this Anglo-Celtic, but that's the way we characterize our population who are of UK origin, and also the indigenous groups working in the Pacific. So that's where I'm drawing my research from. And in trying to work out the main themes, I'm seeing how personal and family practices are embedded in banking services and the use of banking services and economic policy, and also the collection of data. For instance, I've had a very interesting discussion with a very expert Australian Bureau of Statistics. I asked them, I said, where's the extended family household in your statistics? It's residual. We had to kind of make it up because they didn't think in terms of extended families. Extended families were those that were not just couple families with children, but had other kin. Now, transnational families, which for people like me, and maybe a lot of you, that's part of the way we live and act and communicate, they don't figure in the census at all. Because the census looks at households, not families. So we don't really know. We know 3% of the world population is a migrant. So at least 3% of those people have transnational families. Okay. So I will concentrate on these three: the unbanked and gender. This is a story which in banking, in studies of globalization, is totally hidden. And I'll also talk about empowerment, particularly empowerment of poor men and women, which I think is the passionate core of financial inclusion. And I'll talk about how perhaps the lack of good banking services in this sector has led to great innovation. It's led to M-Pesa, it's led to new ways of banking. And I'll also talk about money as a medium of relationship within the family and across borders. When I first started looking at globalization, all the books were about interconnected markets. And then I looked at the FinDex survey, the World Bank FinDex survey in 2011. And half the people in the world are unbanked. And so what happened to that? And more women are unbanked than men. But women don't come out on the top. There are very few images of women in the study of globalization. They're even more absent. So once you bring money as a social concept to the center of the study of globalization, then the unbanked and gender comes to the fore. So these are the figures. It's 2.5 billion people. And women are more unbanked than men. It's something that has still the power to surprise. How can you talk about globalization if you exclude half the people in the world? I was in a village in Papua New Guinea. It was a village where it took 6 hours to go from a small mining town called Wow to Irene's village. And it was pandanus huts and pandanus trees, also a mobile tower. And Irene, who had trained as a primary school teacher, she was telling my colleague Yasha and I, she had no bank account. And we were sitting in a pandanus hut, and she was telling us how she saved the money in the slats of the pandanus hut, or sometimes buried it in the ground. Her husband was a gambler, and she was saving it for herself and from her husband. But she had no control over most of the money that was coming from the betel nut. She only had control over the money that came from the sale of the greens that she grew, and she sold them in the fortnightly market. And in between all of this, she told us, where the money came from and where the money went. And she had 4 boys. And she said, what I want to do is educate my boys. And that's why she wanted a bank account. Let me just give you her context. This is in the Morobe region in Papua New Guinea, a beautiful village. This is the pandanus hut that we stayed in. They built it for us because in the Pupupu clan, there was really no place for strangers. So they didn't know where we were going to stay as 2 women. And you travel like that, and this is the kind of road you travel on. And there's the mobile tower. No electricity, but mobile phones. I took this picture with just beautiful objects. Okay. So, Irene is not unusual. One of 53% of women who is unbanked. And we can't really talk about globalization without thinking of women like Irene. What it showed me was that there was a very close connection between financial inclusion and the way women in the home manage and control the money. In the Pacific, women control a small part of the money because the land is owned by the men. And if you grow coffee there, and Ireland's land was not good enough for coffee, only for betel nut. If you grow coffee there, women do 2/3 of the work, but they sometimes can negotiate 1/3 of it for the household. If you do mining, it's even worse. The man might give you a little bit, and then you don't see the man because he goes off to lay until all the money is spent on what they say on women in beer. So it's a very big problem. So no control. And yet she belongs to the region, to my region, East Asia and Pacific, that together with Sub-Saharan Africa has some of the best gender equity figures. What it means is that as many men and as many women don't have bank accounts. So, and part of this is that they have even less access to mobile phones. Irene didn't have a mobile phone. Her husband had one. And sometimes she would borrow the mobile phone to ask her father, who lived in a village further up the Highlands, that when he came by, she'd meet him at the bus stand, at the stand where the public transport vehicle came, and he would give her some money so that she could put it in the education fund. Kenya has been remarkable in this turnaround. At the very bottom of the pyramid, there has been gender equity now. And it is partly because the phone now costs so much less that women with their own money or with gift money can get a phone. And they see it as so valuable that even though it costs a very large percent of their monthly income, they still see it as something that they want. I was telling Keith, I said, when I looked at all this gender, it connected with my personal life. I was being an anthropologist in my own family and knew that my mother had had to go through things that I didn't have to go through. But even I was aghast that in a middle-income family, the girls didn't get enough to eat. She always said that she ate last, and she knew which plate was hers because there was less on it. Sometimes she would make a bigger parantha so that the brothers would leave some of it on the plate. And nobody could kind of believe that it was happening in our families in the 1920s or so. Because her father was quite a middle-income postal official. She thought at first that it was happening because her stepmother was wicked to her. Then she went to her stepmother's house and she found her village, and she found that no, the stepmother would have done exactly the same thing if it had been her own daughter. So they took her out of school, and these kind of statistics, unfortunately, you still see a very big difference in gender statistics in India in terms of mortality in education. So why is it that the women are so financially excluded? I think it's that first point. Women are seen of less value than men. It is behind killing off the female child, girl child. It is behind lesser education. It is behind the sex ratio. It is behind the ownership of land. It is behind also the control of money in the household. When I studied money in India, in the Indian joint family, I've been absolutely amazed that sometimes money management, male control and male management means that the woman has absolutely no control over the money. And management means she can say, well, you know, I need these kinds of lentils or vegetables. The man goes and buys it. And she said, one woman told me, if I want to show, I'll ask him. And if he says no, I'll keep quiet. It's a very unusual form of money management that you don't see now in sociological theory. It's the irregular dole. And actually, it's not supposed to be a woman's business. One woman in an urban village near Delhi told me that if I asked him about the money, he said, why do you want to know? And she had no answer to that. So really, I think the gender of money is something that's very crucial to actually addressing the issues of financial inclusion. You know, we've put up all the statistics, but those are kind of dull and gray. I think the central story and the passion behind financial inclusion in the global south means that maybe we have a chance, and this is what Amartya Sen has been talking about, that maybe we give people the capabilities and freedoms to get the kind of life they value. Now, if we can do that, that is worth doing. It's not just getting a bank account. The previous government in India tried with financial inclusion. 80% of their bank accounts were dormant. So it didn't work. But in order to empower the poor, we first have to know how they manage their money. And for a long time, it was as if the poor had no money to manage, so why worry? Well, the banks had quite that idea. I know when I went to Kenya, and the central bank governor said, when M-Pesa had asked for the no objection letter, at that time, the central bank only had oversight over 20% of its population. 80% of its population was unbanked. And when you look at the conditions of the bank account, a person had to be introduced by two people and had to have a minimum deposit of quite a large amount of Kenyan shillings. They were not interested. They became very interested once M-Pesa started doing well. So they took everybody, to task, as it were, right from the Minister of Finance downwards. And so what you have now is quite an unequal situation, a monopolistic M-Pesa and the banks having to align themselves with. But I think what the portfolios of money, what the authors did, was to give us an on-the-ground account of how families live. And what was wonderful about their study, and I know anthropologists, some of them have told me, why are you so excited about this study? We've been doing it for ages. But what these people did is they did it in a way that connected with policymakers. And they did it in a way that allowed them to understand that people are not going to give them the real picture of money in the first go. So for 6 months or so, people told them trash. And then the next 6 months they got the picture. And the same thing with Hamid and Khadija in Dhaka. You know how much they earn. You know how irregular the earning is. You know how much they save. You know how much they remit. And you know how much they borrow. And sometimes they borrow even if they have savings. But really, again, it was the male control that one came back to. The male control over the largest part of household resources. I live in Dharamsala for part of my time in India. And I was interviewing, and these are pseudonyms, I was interviewing a woman and her mother-in-law. And the daughter-in-law had a BA degree. The mother-in-law didn't. And the mother-in-law told me that she only knew she had a joint bank account when her husband died. She'd never known she had a bank account. And the daughter-in-law told me she also has a joint bank account with her husband, but she doesn't know what's in it. So you can have banking, but no knowledge of money. And so this is part of the way some of the cultural aspects shape the banking. And I found it very interesting because in Australia, joint account means jointness and togetherness in marriage. In India, joint account means protection. That if the man dies, the money in that joint account will go to the person, to the wife. So that's also a plus because it doesn't always happen. But it was a totally different way. You just had to go back to banking history, as I did in Australia. And you come to know that this is not something so unusual. It was happening in Australia. We followed the UK pattern, where women were not allowed to own property, not allowed to have a bank account. And up till the 1990s, women were telling me that when they were the main earners in the family and they were buying an investment property, the male bank manager was looking at the husband, directing all the conversation to the husband. In the 1960s, even if the woman had money, she had to have a male guarantor. And this whole business about banking being so personal, banking was very male, and still is. I was never invited by a bank manager for a personal conversation. Maybe I didn't have enough money, but my husband sure was. So you can rewrite history of the North also in a very interesting way. What was true though, at the same time that Australian bankers weren't giving loans to women, they were quite happy to accept the woman's guarantee of the son's loan. And particularly Italian and Greek families who felt they had a duty to stand by the son, even if the business proposition was not something that the bank admired. They would sign it up. And in the consumer finance movement then, of which I was a part, we called it sexually transmitted debt. So you can see why in the global south, one had to come up with new ways of banking and new ways of paying. Microfinance, of course, has gone through many iterations. But some of them, as I said, are rooted in the disinterest of the mainstream banks in the poor, and particularly poor women. I went to Thanjavur. Thanjavur is in the south. It's known best for its absolutely beautiful Chola temples, huge, wonderful edifices. But my main focus in the visit was to go to the paddy villages where the paddy farmers lived, because that's where Kshatriya Grameen Financial Services, which really mean rural agricultural financial services, had started off. And now they were 4 years later profitable. Those branches were profitable. Now that was quite a big ask, because a lot of these banking solutions are not economically sustainable. This one started off as being economically sustainable. The formal evaluation of the whole program hasn't come through. But what I saw was absolutely amazing. What I saw was, these are the two of the women who had borrowed from the bank, is that this bank operated on a different model altogether. There was a lot of up-to-date technology, but it was behind the wooden counter. It was in part of the data system. The face-to-face transaction would elicit the financial profile of the household that would then go into the data system. And so next time, if you came for a routine loan, like you came for a 15,000 rupee loan or a 20,000 rupee loan, the loan would be granted in 15-20 minutes. If you wanted to buy a cow, then the vet would have to say whether the cow was a good enough purchase or not, and that took a week. But what was absolutely amazing is that these tellers, about half and half men and women from the neighboring village, not from that village, their performance was judged not by the loans and deposits they gave out, but how well they had improved the customer's wealth management. And I thought, oh, I want a banker like that. And it's doing very well. And so the infrastructure is simple, it's low cost, but pensions and insurance became one of their most popular products. And then I went to Kenya. Actually, I went to Kenya before KGFS. And it was just amazing. I went to Kenya. You know, in India, when you go somewhere, you ask people, how's your family? You know, how many children do you have? It's quite a complicated question to ask in Australia, of course. But in Nairobi and in the safari park and everywhere I went, I asked people, do you use M-Pesa? Oh my God, it was like a current flowed out. There was a guy, a very senior official, government official, who was waiting in the governor's office. And he started telling me how he used M-Pesa. He said there would be a revolution on the street, protests on the street if the government did anything to M-Pesa. He said we can do without banks, we can't do without M-Pesa. And the secretary came and said, you know, the governor's waiting for you. He said, wait, I haven't finished with my story. And so he proceeded to tell me, you know, how he sent M-Pesa to his mother, how he sent M-Pesa for school fees for the farm. The governor did much of the same thing. He told me about regulation, then started telling me how he is sending M-Pesa to his farm employees direct. And then he said, it's changing the way people give gifts. You know, before, when you were invited to a celebration, you usually had to take a gift of money, but you had to be there to give the gift. Now what they do, on the invitation, they put the M-Pesa number. So the presents and the gift become totally separate. I went to Philippines also. And what is amazing about the Philippines that you don't hear anywhere else is the pawn shops are the remittance agents. And the pawn shops have more branches in the rural areas, and very often they have become the intermediary for mobile money. It isn't as if the money goes like M-Pesa from one customer to another customer. When they do direct cash benefits, say after the typhoon, they put it to the agent and then the people come to the agent when they get it. But it hasn't worked very well. You still have quite high financial exclusion and quite a low level of use of mobile money. And we don't really quite know why. We know it's working a little bit better, but some of the questions and some of the ethnographic research hasn't been done. But in Kenya, it's a success story. Of course, when you talk to banks, like I talked to Equity Bank, they're not so enthused about M-Pesa, all right? But nearly everybody else was. There were two people that I met who did not use M-Pesa. One was a middling kind of businessman who dealt mainly with government and large businesses. He did not use M-Pesa. Another was the driver who was taking me back to the airport. And he said he had bought 3 mobile phones for his mother in the village. She lost all 3 because she lost them while milking the cows. So he has to save up, and so now he's not using M-Pesa. Here are some, you can see how very important sub-Saharan Africa is in the story of mobile money. But in all this enthusiasm, there are a few untold stories, and I think these are the stories that are really important for what is happening to money and relationships. One of the things that is happening to M-Pesa money, and we know that, is that it is a very powerful kind of money. Powerful in that it empowers the sender and the receiver, because it's instantaneous. I had to try it for myself. Of course, the first day I went and tried it, there was no electricity. So I had to come back. So, you know, infrastructure problems are still there. So when I sent the money to my host's ex-maid, that came a message that Lucy had received the money. But how do you believe that? And then I understood that when a colleague and I were talking about M-Pesa in a taxi in Melbourne, the taxi driver happened to be from Kenya, and he turned right back. And he said, is M-Pesa coming to Melbourne? So, but we don't know, for instance, whether M-Pesa money is women's money. Nearly every man I talk to in the week or so that I was in Nairobi, it was not what you call deep ethnographic research. He was sending money to his mother. So I said, why don't you send money to your father? And he said, well, you know, my mother needs small amounts of money. And I can fulfill her wish for money immediately. And it makes me feel good. And in the central bank, I mean, you know, I thought I was going to be in the central bank for 2 hours. I was there all day long because the people couldn't stop talking of M-Pesa. And the person in charge of the national payment system, we were having lunch at 4 o'clock. And he told me, he said, you know, I paid my mother's hospital bill and she died 2 days later. And you could see that this was important to him, that he had been a good son. So, but is it going to be women's money? There is some initial research that has not been published yet from Kenya, is that the women's matricking send money. And we want to know then how it will change kinship systems and relationships. I first, of course, came to know Keith through his work. And when he wrote about the memory bank, it immediately hit what was my experience of money in families. And it hit particularly the use of money in intergenerational relationships. You know, it's very difficult to calculate how much to give as a money gift. And usually I would ask my mother, but she's dead now. And sometimes in India, I have to mark relationships that were not important to me, but that were important to my mother. And so we would line up with our packaged goods of, packaged envelopes of, you know, money gifts, and give it with our names on top of it to the eldest woman in the clan, so that she could know that we had marked and we had remembered relationship in this money gift. What I found when I was studying money in Anglo-Celtic middle-income families was that the men and the couple would talk about money, but they wouldn't talk about money with very many other people. And so the information flow and the privacy of money stayed there. And I asked, I said, don't you talk money with your adult children? They said, no. What they do, they see he bought a new house, he's got a new car, he must be doing all right. But he wouldn't ask, you know, how much do you earn? That kind of question was not asked. But that kind of question was asked of me by my uncles all the time. It wasn't as if they were being nosy. They wanted to know if being alone in a foreign country, I was all right. And so I would tell them. And I knew that if I wasn't all right, they were the ones who were going to make it all right. So the boundaries of family money are very much broad in Asia and Africa and Latin America. They're a primary medium of care. This is not to say that there is no caring in other families, but the medium of caring is, you know, sons will do the gutters, they will take the parents shopping, they will take the parents banking, the daughters will communicate, and they will make sure that the mother is all right. But in some of the societies of the global south, partly because money is a gift, there are occasions when only a gift of money will do. That money is seen as a primary medium of care. You can give as many tea sets as you want at a wedding, but if you haven't given the shagan, you haven't given. And Vietnam is even better. I have started doing some work in Vietnam with colleagues there, and they say that, you know, the card in which the wedding invitation comes, when you go to the wedding, you put money in that card, it already has your full name on it. Because this has to be a matter of record, because you know you cannot give less than you have received. And you have to calculate it in terms of your ability to give and the importance of the relationship. It happened to my sister and I. My sister lives in New York. And we had this aunt who was very precious to my mother. Not of natal relationship, very special relationship. Her grandson was getting married. And we thought we really need to mark it. And both of us thought we'd give the groom a carved dressing table. And my cousin, whose son it was, said, "What's the matter with you two? You've gone so foreign. Just give Shagun." And then we didn't know how much. We didn't know who to ask. But obviously we gave the right amount because my aunt said, "Oh, I must give you a suit, a suit to wear in return." We never got the suit because the trunks were locked. But, it was good for us to know that she thought we had marked the relationship in a respectful manner. Okay, we'll talk about this later. I'm going to give you an example from your continent. I thought Indian family money was extensive enough until I read Akui's story about Dinka money. 24 male and female extended family relationships to whom money was sent. And then his wife's siblings were staying with him. And so he had relationships on the female and the male side, plus some friends. Half the money would go for remittances. But this was essential for him to consider himself and be considered as a moral man. I thought maybe Akui was exaggerating a bit. And I'm kind of connected with a Dinka man who works with an NGO in my neighborhood. And I asked him, I said, "Do you send money home?" He said, "I send money home every week." And I said, "How much do you send?" He said, "Half my salary." So obviously it is working wherever you are and not just in the States. I've been a little bit embarrassed and abashed when I have gone back to India to interview the transnational families of recent migrants. It's a bit of a self-select sample because, people who have problems with money don't really want to front up to an anthropologist to be interviewed. Or at least both sides don't, The father might want to talk and the son pretends he's never received your call, so you let him go. But what came through are these notions of what a good parent and a dutiful son. Remember, it's always a son, My sisters and I were sending money home, and it's only when I started writing of it that a reviewer said, "What were you doing sending money home? It's only the sons who send money home." I realized that our family was a bit of a freak. No sons, and partition had changed gender norms. But a dutiful son will look after his parents. So I heard story after story of how parents will dip into their pension funds, they will mortgage their house, sell their land to send their son for education to Australia. And I asked, "Aren't you worried?" "I wouldn't do that." I said, "Aren't you worried? What will happen to you in your old age?" "Oh," he said, "what's there about old age? We have enough. We don't need very much." And then I heard these stories of sons who would in 3 years of working part-time and casual send money for the sister's marriage, send money for the construction of a house, and only then say, "Well, now it's kind of my turn." It doesn't happen all the time. Yeah. And Bhagwan is Bollywood's answer to King Lear, except that, the parents don't die in the end or don't get mad. Adopted son comes and puts the parents' photograph in the altar, and so everything is all right. So this is gift money. I don't know how it works here, but it has to be packaged. And if you've ever been to a Chinese New Year function, the children's absolute delight is in hoarding these ang pao packets. And banks, you have lines at banks because banks then give these very crisp packets and new notes to distribute. And then the same thing happens for Hari Raya. And of course in Japan, gift money is very important. But where, and you know, in winding up, where it's very important to know that this is not just a family kind of internal business of sending money home. Remittances now are 4.4 billion. India receives 70 billion, China receives 60 billion, and Nigeria at 21 billion. One of the largest flow of funds. I talked to Dilip Rathod, who is in charge of the remittance unit at the World Bank, and he said that when they were doing some forensic accounting, they found that for the Philippines, the IMF had totally underestimated the remittances. And even now, these are only formal remittances. Add another 50 to 80% of them to get the total number in terms of formal and informal. So for some countries, they're larger than their largest exports. This is in the region. Sub-Saharan Africa, actually the problems of accounting for remittances, the Rebecca said, were absolutely enormous. So we don't really know the right amount, but that's what we have right now. South Africa is in a place of not great honor. The cost of remitting money from South Africa is among the three of the highest. And mobile money hasn't helped. So where the average cost is 8.14%, what you have, this is of the amount sent, you have South Africa, Zambia at the highest. And it comes to more or less 18, 19%, 8, 9%. What in remittance though, in terms of the anthropology and the sociology of money, what is very interesting is that the value of money changes when it crosses borders. It's not just currency regimes, but it is the equivalence of money and care. And it is the difficulty of balancing the needs of settlement for the nuclear family overseas and the family back at home. And sometimes the issues of belonging come to the fore when it comes to issues of inheritance. There is a big silence around inheritance. And when you probe a little bit more, they'd say, we didn't really need it. But in one family, where he had paid all the expenses for care, found that the two brothers in India had nicely divvied up the family property. Couldn't really say anything without huge court proceedings. He stuck to his guns and he said, that desk. My mother gave me that desk. And so 2 years later, the brother came with the desk. So it is that, inheritance becomes a shorthand for belonging. And sometimes, and you see it happening among the Italians and the Greeks, well, the best bit is not to have any expectations. So what about the future of money? You said there will, in some ways it will remain the same. Trust, it will be personal and impersonal. We will continue using multiple channels for different kinds of activities, and we will use multiple currencies. It's happening already in Africa. It happens in Vietnam, for instance, the dong and the US dollar, and gold. Gold for property transactions, not just gifts. And but what will be different is that half the world will have access to flexible credit, to savings, to insurance and pensions. For them it is these old technologies and old ways of banking for us that are going to be new for them. And money will become mobile and virtual. But I think global money is of a different order than national monies and regional monies. First, most global money at some point of the transaction, unless it's carried by hand, becomes virtual. But a dollar of global money does not translate to a dollar of local money, because it is valued against the care you have given or not given. It is valued against perceptions of how easy it is to earn and how difficult it is to spend. And the challenge really is, and this is the question, in all of these policy changes and in all of these changes in the nature of money, will we get the gender of money right? I mean, sometimes even when policymakers are very well-meaning, as with the Rana Plaza tragedy, we found that it was at the intersections of national, regional, and global levels of regulation that decent work did not happen. And when you talk to central bankers and you hear them talking in conferences, they are not connecting the economic and the social. And we have seen this in regulation in the law as well. So, and least of all, they are connecting with what is happening within the household. Actually, money within the household still remains very opaque. I was absolutely amazed to find that in the Nachiket Moore report on financial inclusion in India, which came out just a few months ago, and he is one of the visionaries of Indian banking. He is the one associated with KGFS, and actually some of his recommendations of multiple kinds of bank have been taken up. 247 pages, and the gender not once. It's not a framework. Doesn't mean it's not a concern, but it's not a framework. And Thomas Piketty, I couldn't believe it once. He's talking about inequality once. Gender was mentioned. Actually wrote to him and said, what happened to gender? And he said, yes, yes. It's in another paper. I went back to that paper. And what I did learn something from that paper, and perhaps Keith, you already know it, that in France, the pattern of gender inheritance was very different because of the civil code. It wasn't like the Married Women's Property Act, you know. So women had a right to property and to inheritance. They landed up with something like 35%. So I'm surprised to be putting up this slide for you. 4 days ago, Independence Day, Modi, whose biography and previous statements had absolutely no, did not make me very hopeful that he's a gender-sensitive person. And then he comes up with this. And in Hindi, it sounds much better. He first says that he wants to integrate the poor, the poorest of the poor with bank accounts. And it came through as something he meant. Because he also said, I have been poor. I know what it's like to live in poverty. And I want to give dignity to the poor. And then he talks about every poor person being able to manage an account with a mobile phone. And then something that I've been really critical about, because previously India's financial inclusion policy was one bank account per household. And I thought, it's not a mystery who is going to get that bank account. But now there are going to be 2 bank accounts per household. One male, one female. So you've got 75 million people, and you've got 1.5 billion accounts that have to be opened. And the accounts, you know, don't belong to what an old banker called the CASA model, the current account savings account model, you know, which lay dormant. It comes with credit, it comes with an overdraft, it comes with a debit card, and it comes with insurance. And when I looked at that, I thought in India, this will be the first time many women will have 5,000 rupees in their name. Thank you very much.
Marina? We'd like to give this as a small token of our appreciation.
Thank you so much.
Why do I slip into formal speech on this occasion? But thank you very much.
Thank you.
My name is Kwesi Pra. I work with the Thabo Mbeki African Leadership Institute. I'm a historian by training and passion. So, of course, the presentation has raised many red flags, especially with the concept of the bank, its historical legacy in Africa, and as African, my relationship with the bank. So, Barclays and so on and so forth. So, my question would be, throughout your research and the people you met, specifically in Africa, what is their understanding of the workings of the bank? What is their understanding of how the bank distributes currency and at least evaluates its currency, and basic historical awareness of the role of the bank in their transactions and the evaluation of their lives? Thank you.
Thank you. You'll have to collect it. You mustn't be diffident. I mean, come and grab it. Force it.
Thank you very much. I must say, my answer to will be shaped by discussions at the Central Bank of Kenya, mainly. And it was a picture of total arrogance as far as the banks were concerned, and went back to some of the policy research papers by the think tanks there. And there was no great yearning from the banks to get into the market of the poor. And so it was only when the transactions of M-Pesa came to rival their customer base that banks started saying there's money here. So in terms of social responsibility of banking the poor, that had to be thrust on them by saying that there is a market among the poor. And a lot of the, and Keith and I were discussing this, some of the discussions that I've had, not so much in Africa, because I'm new to Africa, but I was resident in the Central Bank of Malaysia for a year. And there was absolutely, I was writing their history, and there was absolutely no doubt from the central bank governors downwards, and they were quite passionate about it. And so was Nugget Coombs, who became the first governor of the Reserve Bank of Australia. That's the central bank, and banks have a social responsibility. And where the banks do not fulfill their social responsibility, it's the central bank's duty to ensure that they are forced to do that. So social responsibility was at the core of the mission of the central banks. And I think with financial inclusion, that is what's happening. Now you hear the Reserve Bank governor in India talking about financial inclusion. Reserve Bank governors in India have talked about financial inclusion for a long, long time. But what you have in the South is an acknowledgement that the government and the central banks have to work together. This whole business of being independent of the government does not work for social development. So it is only now that you've got the political will from all levels of government that we are hopeful that something will happen in financial inclusion.
What I read from this intervention is that there is in fact quite a contradictory situation in that, I mean, let's face it, banks are not lovable institutions, and many people have had long experience of discrimination against them. And one of the reasons why mobile money is taking off in the South is because the banks are usually weaker there than they are in the North. I mean, one of the reasons you don't get mobile money in the United States is because Wall Street doesn't want to open that possibility up. But then, as you said, in describing some of the people you met in Kenya, many people really don't give a fig about whether the banks went out of business altogether or not. And so there is, it's not as straightforward. I mean, the idea that being banks and getting insurance and pensions and so on is a way forward to global economic democracy has to run up against the perception that many people may have that banks are not actually in it for them. That's
yeah. Look, I just want to also say that we have been pushing financial inclusion in Australia, but it's such a banked society. More than 98% have bank accounts because the benefits go straight into the bank account. So, but we have about 18% of people who are underbanked and unbanked, and we have not been successful in getting financial inclusion into any kind of review reports. And this is despite a lot of effort from NGOs and the consumer finance groups. They don't talk financial inclusion.
Thank you. Next, Eric. Announce yourself, please.
Thanks. I'm Eric Warby from Wits University. I enjoyed the talk so much, and I have many questions, but I'm just going to put one. Most of the talk was a very happy talk. It suggested that global money is a great thing for everybody, but in particular for women. At the same time that you suggested that it really is revolutionizing social relationships, and that in order to understand that, we have to do the work that would investigate how those relationships are changing. But at the same time, as I'm sure you would acknowledge, anytime you revolutionize social relationships, you create not just tension, but sometimes war, a kind of war that goes on within and between household members, especially when they straddle borders. So I wondered if you could comment on that. The one point when you alluded to that possibility in the talk was when you talked about remittances being the currency of care, and then suggesting that sometimes the people left back home who were doing the actual work, the non-monetized work of care, were rebelling against that kind of intervention at the moment of inheritance, when they would say, "I'm sorry, but I'm the one that did the cleaning and the care for mom when she was sick." So can you say more about the downside, about the ways in which global money can lead to that kind of intra-household warfare across borders?
Look, we have some notion of this from what happened in microfinance when women were given money. You don't always have to do it in a confrontational way. In Afghanistan, what microfinance lenders do is they first give money to the man to open a business. After the man has received the money, then they give money to the woman. The rural cooperative banks in India, who've been very successful, women's cooperative banks, what they do is they tell the household that if the land and the house is jointly owned by the man and the woman, then you get a lower interest rate. And a lot of people front up for that. So it is sometimes in the way of doing it that you have to actually know how you go together with cultural norms of it. Confrontation is not always a good thing, but exclusion definitely isn't. So you have to know how you're going to manage the money, what is the morality of money within the household, to work with the culture rather than against the culture. And then slowly things will happen. And it happens in the Anglo-Celtic families I studied. A woman would go and get part-time work. And I learned never to interview the husband and wife together, because the woman had ideas of how she could use the money and how she could not. And the man would say, "Did I ever stop you from using it?" He didn't, but she would not use it for herself. But when she went to part-time work, she said, "I can now buy a book, I can buy a dress, I can go for a pedicure." Nobody was stopping her. But the gender of money, money earned is money owned. So you have to go with that kind of way.
Thank you. Adrian. Yes, you might do something about it yourself as well.
Hello, I am Adrian Sayag. I'm a researcher at the CNRS in France, and I was previously a postdoc fellow among this human economy program. My question is actually a continuation, or it's a comment, maybe comment question, which is a continuation of the previous one. I was also surprised by your enthusiasm your enthusiasm as regards to all of the monetary experiments that you mentioned, and especially M-Pesa and microcredit, and you always use the category of women or poor as if it were kind of homogeneous, as far as I understood. So my question was, what would have happened to your story if we would have considered not those categories as homogeneous, but all of the stratifications that are operating among women or among the working class and so on? Because what I have in mind here, and it's also Isabelle Guérin's research, who worked quite a lot in southern India on microfinance, and she showed that the way people engage with those institutions was really shaped by their class, gender, or caste belongings, and that, for instance, some microcredit programs could benefit only for the most better off among the poorest and so on. So it was, a bit more to what would have been your theory if you would have taken this into account. So how do, or in other words, how do M-Pesa and other things interact with those stratifications among?
So normally, this is a nice inversion. You have privileged gender. Normally, people don't mention gender, so some woman can say, "What about the women?" Now he's saying, "What about class?"
No, because I think that women, there is stratification even.
No, it's okay. I mean,
Look, it's a great question. It's a great question. When M-Pesa was introduced, and the governor talked about it a lot, he said, we thought it was for the poor, but people started paying the satellite TV fees through M-Pesa. And we knew this was an upper middle class phenomenon, and that it was not the poorest of the poor that were using it, but it was the upper middle class that was using it. But it took a while, it took a while. 2007 M-Pesa was introduced, and now the latest survey is that it has gone down to the bottom of the pyramid, and men and women use it differently. And also, different, it's not just class and it's not just gender, but it's also activity-based. M-Pesa is not used so much where agricultural payments have to be made, because they're in large bulk. So those payments are still being made in cash. And M-Pesa, the central bank thought that M-Pesa was going to lead to e-money. It becomes e-money in the middle, but 90% of the money is actually being taken out as cash. So we know that sometimes when something is introduced, it gets implemented in a way and used in a different way. Microfinance is the same thing. Microfinance also, has gone through 3 iterations in Bangladesh, and the rest of the world is learning from those iterations that it was not flexible enough. What you need was flexible credit, not enterprise credit. And if you just give it to the woman, what happens to family dynamics? So, how do you deal with it? That's why I'm so enthusiastic of the ethnographic study of how the poor actually manage their money, rather than having generalizations in different cultures, different things. For instance, South Africa, Roscas are very important. Now, any banking innovation that does not look at the lessons we learn from women's use of Roscas would be ill-advised. So you have to see how it works. And it doesn't always work for the poorest of the poor. That's why, I guess, the enthusiasm for what is happening. Just opening a bank account does not do it. You have to ensure that there is flexible credit, there is insurance, because that is what the poor want. And that is what came out of the study of portfolios.
I should say that, is there anybody over here, by the way, who's burning to ask a question, or are you the listeners? Okay. The lurkers, I should say. I'll come to you, but I'll take Vito. I just wanted to say that Hadrian worked in Argentina in the aftermath of the big money crises that they've had, and studied how poor people, working class people, organize their money, and developed some proposals for the improvement of availability of credit and savings. So he's coming out of that.
Credit hasn't been great for the poor necessarily in Argentina or
but,
Chile.
Anyway, but he's got some neat arguments about class, got to admit, which we don't denigrate. Vito.
Thank Thanks. I'm Vito Latez. I'm a postdoctoral fellow in the Human Economy program. Thank you so much for this enlightening lecture. I mean, what I really liked, among other things, is really this emphasis you managed to put on money as a very personal and very connected to relationship and family. I'm not an expert on money, but Keith has been one of my mentors in this way, and I think you continue very much, we are very complementary in that, but I really like the idea of how you be able to show through family relationship how money can really be cared. And I think this is a very interesting thought, because it kind of breaks away from some of the skepticism that I also share at times, and some people share about money as evil, money as bad, money as something that, especially in places like Southern Africa or other parts of the South, has actually played against people. So I think there's a lot of hope and potential in this kind of theorization. What I wanted to ask is, perhaps it's on this line, so it's a bit not so much of a purely money from a technical point of view. I mean, what do you see as the, how do you see this struggle, or what do you see this kind of antithesis between the danger of money as an equalizer, as flattening, and in places with high inequality as fundamentally oppressing the people who don't have enough, and the constant attempts that you show through your research of people actually to personalize it, to make it into care, into mutuality? How do you see it as a tension? How do you see this kind of dialectic?
My answer is
By
going
the way, we're going to be winding up in 10 minutes. So.
My answer is going to be shaped by my own personal experience. I come from a refugee family. Yeah. After the partition of India, we moved from Rawalpindi to Delhi. And as a family, we know what it's like to strive to live and fulfill wants and not have enough. Or even more to the point, to tailor your wants to what you have so that you never ask what you want. So I have always seen money as an enabler of options. So I don't see, I don't see money as evil at all. I see not having money as a great minus. But of course, a lot of the research shows that after a certain amount, it doesn't make any difference. But inequality is of great concern. That's why I think my enthusiasm for financial inclusion. When you're talking of great inequality, you can't but focus your policy on the poorest of the poor. And this whole business that it's going to trickle down, never mind. I don't think that's really happens.
Thank you. Who's the gentleman over here? Yes.
Good evening, Professor Singh. My name is Siano Pali. I am an independent currency trader. I think you opened your presentation by saying that the South-South conversation about the future of money centers around promoting financial inclusion. I think this is a very important point. Before I continue, are you aware about an institution called the African Bank in South Africa?
Yeah.
Okay, great. So my question is, given the demise of African Bank in South Africa, what lessons can be learned for current participants as well as aspirant entrants into this market? What lessons can be learned from the likes of KGFS as well as Grameen Bank, etc. in Bangladesh? And my second question, sorry to interrupt, is about the future of money.
Your first question is your last.
I know what I read in the papers of African Bank and the second bank that's also going under. That's not financial inclusion. Giving credit to the poor and knowing that they cannot pay back and saying that they're profitable because you get enough back in fees, that's very different from microfinance, and that's more like what happened in the global financial crisis, where banks lent to people knowing that they could not afford, and then got fees by trading the securities on. And so when African Bank was trying to calculate that it was going to make enough in fees for lending to the poor to be profitable, this was not based on any kind of criteria that the poor were going to be able to pay it back. But even not paying it back was profitable in terms of fees. So this is not the kind of thinking that's behind microfinance and KGFS. Usually that kind of lending to the poor is marked by a very low percentage of non-performing loans.
I mean, thank you for the question. It's a very important one. I mean, I remember when Mandela was still president that he tried to lean on the main banks in South Africa to extend their facilities to the poor, and they replied then that that it wasn't worth it to them. It was too expensive, administratively cumbersome. And he said to them, look, we let you keep almost all your loot, and if you're not going to do anything for us, then we might have to think of more drastic solutions. And there was some effort, but it's only in the last, since the National Credit Act of 2007, that unsecured lending to the poor has become a disease in the South African system. And although almost all the major countries in the world have debt relief institutions built into their laws of credit, South Africa has none. And the fact that Capitec and African Bank have been essentially assuming that they will always recoup enough from fees on delayed repayments and so on and so forth, and then finally, I mean, it's a huge thing, and I think it is relevant to the question of banking and unbanking the poor, and I'm sure you're right about that. And we actually have a fellow, Jürgen Schraten, who is now back in Germany, and he's writing a book on precisely this problem, which he has researched, I think, more fully than anyone. So I just thought I'd put that in. Marina.
Hi, Supriya. Thank you very much for a very interesting presentation. I have a comment, actually. I'm a postdoctoral fellow with the Human Economy Program, and I've researched the so-called informal remittance system that operates from South Asia called Hundi or Havala. And you will probably be aware that there's quite a bit of literature on this in policy circles from the World Bank or the IMF. So first thing I wanted to say was this picture of Narendra Modi is rather, let's say, altruistic, because I think there's a bigger story behind it. I mean, well, what I'm saying is it seems altruistic, but it isn't. I think there's a bigger story behind it. I think my colleague also pinpointed when he talked about class. When he talked about class, he was also, reflecting on something that's quite important here, which is, why has M-Pesa had so much currency in Kenya? Well, we're really talking about mobile telephony infrastructure, which doesn't exist in the same way in India. So, there are vast swathes of India which don't have that kind of mobile telephony infrastructure. That's why mobile telephony hasn't taken off. So when Modi is pushing this agenda, he's really talking again about the same kind of class. Plus, there's the issue of transparency. So your statistics picked up the formal remittance corridor. And of course, you know Havala as well, Hundi Havala. And you know, therefore, that the remittances that flow through this corridor are, much greater than the formal remittances. In fact, they're said to exceed foreign direct investment flows. So I think, what I'm trying to say is that these statistics don't reflect the reality, which is that, the vast majority of the unbanked will use informal systems because, they're just much cheaper and the conditions are not in place for them to be able to access these kinds of things for quite some time to come.
So cheers for the informal economy.
You're right. Actually, we don't know enough. The kinds of figures that we have globally are 30 to 80%. But because it is informal and not measured, we don't know enough. But more and more in the literature, it is seen as informal, not illegal. And it's informal for exactly the reasons you say, that actually the banks are too costly and they're not fast enough. And at the receiving end, the people don't have bank accounts. And it even gets worse because a lot of the women are secluded and they're not able to go to the bank or the post office or the market, and so the person comes home. And it's trusted in the main, but your own work shows that there have been cases where people have run away with the money. But I think what's happening now is people are recognizing exactly what you say, and some of the costs of remittances have gone down very dramatically between the US and Mexico, between the Middle East and India. And I think the second tranche of the whole migration remittance project is to get a 5% reduction in this 8.14% average cost of remittances. That's very high. And once, together with the central banks and the government and greater financial inclusion, if you have lower remittance, then it is in the country's interest and in the family's interest that you get more reliable, more instantaneous and cheaper ways. And the countries have to work with it because, you know, remittances help securitize their foreign exchange loans. So, and it gets into the balance of payments, whereas Hawala transactions don't get into the balance of payments. So it is in the country's interest to see if they can work together. Between Malaysia and Nepal, the cost of remittances have gone down because the central banks have worked together. Singapore has become a very low-cost remittance corridor because it's important, you know, for their workforce to be able to send it.
Thank you. I'm going to ask one more question, which could be your second question. But if nobody else, there is one. Sorry. But make it quick, please.
Hi, my name is David Peterson, and I'm here for the conference. Of course, we've already said hello. But it's a follow-up on the comment and your response, and you gestured to exactly something that I'm curious about. You mentioned that you had spoken with Dilip at the World Bank, and I know he's a machine for this project on remittances. And the other part...
There's a personal element there. He comes from Orissa and he used to send money home.
Yeah. But this other piece of the project that you just gestured to, that as it becomes more formalized, the possibility to actually take part in all kinds of innovative financial development finance, I guess is the technical term, securitization. And I wondered if you could say more about that, because that's another piece of the puzzle.
It's a huge puzzle.
Yeah, it's a big question. It's
Or I'll answer it very
It's a lousy
shortly.
way to end.
It's a very, I'll just give you, you know, there are lots of people who are very enthusiastic about remittances because it will help alleviate poverty and it's pro-development. Yeah? But when you talk to people who send and receive remittances, they're not thinking of the countries or the region's development. And so there is this schism there in the kind of debates. Are the remittances being productively used? And so you have countries like India and Bangladesh, which are falling over to try and see if they can channel these remittances into micro-enterprises, because they need to be productively used. But all the surveys are showing that households that are receiving remittances, they spend more on education and health. And these are not seen as productive. And I'll just end with an anecdote. When Amartya Sen got his Nobel Prize, and he came on this red carpet tour of India, and everybody wanted to be close to him, and wanted the mantra of how can we raise India up. And they thought he can give him an equation. And he told them, invest more on health and education. And there was this great silence.
Actually, he once said, more free newspapers. But thank you very much, Supriya, for a really stimulating and enjoyable talk. Thank you very much.